Good morning, everybody. Welcome to the morning volatility report. It is Ian Giovinazzi, Chief Operating Officer, OptionPit.com, welcoming you. And we have that event on our events page yet? We do not. Okay. On April 20th, we will be doing a webinar, a Saturday webinar on portfolio management, trying to finance portfolio management. Also using TLT as kind of a help in portfolio management, stuff like that. Okay. So we'll talk about beta weighting, buying puts, how many puts to buy, financing puts, when buying puts is just a dopey idea, how Vega works in a portfolio, all that kind of stuff. It will be set up for the beginning investor. Okay. Blog from last night. Anybody remember seeing The Quiet Man? Of course, I'm dating myself substantially by that, but a fantastic movie. I highly recommend everybody see it. With the Duke. But just me, I'm just looking at this. I know it's been going on now for 2 or 3 years. We're in the diminishing returns here. Volatility spiked really hard yesterday. It's coming back down. Again, we had a little fade trade here that we had talked about in our chat room on that, which looks like to be about the right idea at this point. And I think the key thing is, has the term structure really changed? We go to historical prices. We'll show previous day. We'll add today. Okay. You see here, like that long term, right? Now we're dropping down in. So does anybody? So if anybody looking at this curve, would you say there was a huge shift? Yesterday there's a shift up. Today the green line, right? Not a major change, right, in the curve, except for it just shifted way up when everybody was freaked out, and a little lower. So at least as far as like the longer term vol market's going, there's not a huge difference. Okay. So I'm going to say, at least for right now, while I think all the central bank flimflammery is definitely into the diminishing marginal returns at this point, the market doesn't seem to care. That doesn't mean that we are not interested in looking for keeping our eye out on the long term for things. Because what can happen is, right? So you've got, don't forget what the market's pricing, right? You've got a disconnect between, all right, what everybody might be worried about happening in the future, which tends to make the near term less liquid, drives the realized vol down. When the realized vol gets driven down, okay, our term structure with volatility gets driven down. Okay, and things start to get cheap again, and you're going to see this huge this sort of really steep contango in the term structure of kind of the marquee index products and ETFs like SPY and QQQ and the Russell and stuff like that. Okay. So right now, what we'll see how this. But right now, they're marking the volatility down. They should. If there's no follow through, when you have that, like I said yesterday, when you have that sharp of a run up, okay, in VIX futures, and there's no follow through the day, or the rest of the day doesn't follow through, it's very hard for volatility to stay there, right? And that's the reality. So we came up with some strategies on the close yesterday for everybody that was in our gold level, in the gold lab at the end of the day, to kind of take advantage of that. So what we have now is we're probably just going to slide around, right? What we might see is we could price a butterfly maybe, like a 3-day fly. Might not be a bad idea going into next week. Another thing too is, maybe we could set up for a little bit more. I'm going to look at oil, see if there's anything interesting as an oil trade. We're starting to get a pop in volatility in this thing again. Not in the option volatility, but actually in, the things really moving around a little bit. So we'll see if we could find something that works out in there. We talked, and so those to me are like the big things. Or if you're looking for like an iron condor, I think today, that type of position, you just have the pop and vol. At the money, VIX is now 12. It's not 10 like it was at the beginning of the week. You're getting much better prices to sell. Also, the market's now in kind of this, seems to be sort of hovering around this 2050 level. Can't really go anywhere. Right? To me, you got jump and vol, market kind of stuck. Good time for some kind of iron condor. So we'll price that in our chat room today as well. And for all of you that are Option Bit Live members or above, Mark's going to be doing the calendar and diagonal trading today. But I think too is my biggest thing is how the market really holds up after that ECB. What I'm only going to call it is a surprise announcement. I mean, everybody knows the central bankers keep trying to do this stuff. It looked like we thought there was going to be an end to it. But again, every time they leave the door open for more, I think that adds volatility to our market. So we're bouncing back from it. Definitely love the rise in oil prices. That correlation is still pretty strong. So, and it seems to really work when other things drag the market down, like central bank stuff, and then oil prices rise. That gets everybody a little happy again. So we'll see how long this lasts. All right. And with that, I will see all of you in our chat room shortly. All right. Bye-bye.